What do you think of Morneau's assessment to what is currently ailing Canada's energy patch, that there is no silver bullet solution?
Well, I think that, unfortunately the time has passed because we should have been expanding these pipelines and the government exercising its constitutional authority a long time ago. So maybe there's no, magic bullet right now, but, this is really, for years now, a missed opportunity. The reality is that we've had the global oil price benchmarks come down because of what OPEC has been doing with its stepped up supply, which has overwhelmed any pullback we've had from the pullback in Iranian exports because of the sanctions. At the same time, we have this lingering glut in Canada. It was, I think, accentuated by the fact that we produced so much during the summer. But the problem of a domestic glut of historical proportions, coupled with the fact that global benchmarks have come down, have caused these prices to melt as much as they have over the course of the past few weeks.
And what do you think this means for the Bank of Canada? I was looking at the beginning of October, it was an 80% chance that we would get a hike in December. That's dropped all the way down to 15%. And I believe that's something that you'd been kind of advocating for the Bank of Canada to rethink its path and aggressiveness with respect to rate hikes. So is this a reasonable reset on the part of market expectations, or do you think that those expectations should be ratcheted back even more?
Well, I actually think they'll be ratcheted back even more. And look, it's not just what's happening with the oil price. I always thought that the Bank of Canada's view that we had passed this tentative trade agreement with the United States and Mexico, that somehow this would have alleviated all the uncertainty. I thought at the most it would have alleviated part of the uncertainty, but certainly not all the uncertainty. And this trade deal, even if it passes through Congress, which isn't clear anymore, is clearly inferior for Canada as to what NAFTA was. So, we have the oil price. I think we had a huge overestimation from the bank as to what really this tentative trade deal was going to do for the economy and for capital spending. I don't think it's enough. But I think the Bank of Canada is going to luck into a certain situation here, because you could see just the tone from the Fed in the past few days and from Jay Powell is far different from what it was in early October, when the Fed was talking about perhaps having to go through its perceived estimate of the neutral funds rate. Now the Fed is talking much less hawkishly, including Powell himself. And if you look at the futures curve and the Eurodollar's forward market, you'll see that investors are starting to pare back their expectations for what the Fed's going to do. As a result, I think this alleviates some of the pressure on the Bank of Canada as well.
Yeah, Bloomberg has a pretty good story on this possibility of a Fed rate pause today. So you've talked a little bit about central banks, David. Let's talk about the federal government in this country. We just had that soundbite from the finance minister, Bill Morneau. He said when it comes to the energy story, there is, quote, no magic bullet. And he continued on, obviously, with the focus on Trans Mountain as one way to try to address this situation. What's your assessment on how the federal government specifically is handling this energy issue?
Well, I think I had answered the question earlier when I said that, we had already had a missed opportunity. I think that the big problem in Canada is that we have too much oil domestically that we can't ship out except by rail, and that's not a long-term tenable solution. What Canada needs is we need pipeline expansion. We need it right now to be able to sell our oil to foreign customers. So, I think that, the bottom line is really where is the coherent and cohesive energy policy coming out of Ottawa, beyond the fact that we bought a pipeline and that nothing else is happening. To me, is that we're still in a bog of a cloud from a policy perspective.
I don't know if you saw, but there was now a second letter from a foreign investor in Canada's energy sector, this time emanating from the UK, a woman, Susan Johns, who's been an investor in Canada's oil patch for about 30 years. It was in the Financial Post, echoing what we'd heard from a U.S. fund manager in a letter to Justin Trudeau saying, essentially, I've been an investor in this space, and now to see a really promising industry be throttled by regulation, carbon tax issues, it's really made me search elsewhere. Do you think that message of investors voting with their feet, and if they want energy exposure, getting it anywhere else in the world, is truly resonating at the federal level?
I think that, the energy issue is absolutely huge, and it's going to emerge, I think, as a very important election issue over the next 11 months when you consider how important it is from a capital spending standpoint, job creation, and all the spin-offs it has in other sectors, all the way to real estate and banking. So I think the energy issue is going to be very important, alongside a bunch of other things, which you haven't talked about yet, which is how do we make our tax system more competitive in the upcoming budget? How that's going to formulate in the coming election campaign. So we have energy issues, a huge bottleneck. We have tax uncompetitive issues in Canada, a huge bottleneck. And we have, for better or for worse, the U.S. has undergone in the past 12 to 18 months huge moves to deregulate industry. Again, what's Canada going to do on that score? Because that's also the excessive red tape and bureaucracy as another impediment to growth here. So these are things I think that I've been writing about that are one of the areas why the Canadian economy is going to lag so far behind our competitors in the U.S. and why the Bank of Canada was premature in hiking interest rates and threatening to do more.
So you've said a few things this morning, David. You talked about falling behind. You talked about in the energy sector, the quote, missed opportunity. You've mentioned that a couple of times. A couple of years ago, we started hearing this conversation around, is Calgary headed down the road of Detroit? And then as things started to rebound, that kind of went away. But I would say over the last week, I've started to hear that kind of conversation again about what Alberta and the energy sector do going forward. Part of your job is forecasting where the growth is going to come from in Canada. How do you feel about that concept that people are now sharing once again? Is Calgary going the way of Detroit?
Well, I think that's a really extreme view. My sense is that you could argue that Calgary inevitably may have to reinvent itself and diversify. This past week I was in Calgary and Edmonton seeing clients. I would actually say the mood in Calgary was not nearly as bad as it was back in early 2016. Edmonton has certainly radically diversified its economy, much like Dallas, Texas had done from that dramatic decline in energy prices in the mid-1980s. Edmonton really doesn't seem to be missing a beat. But my sense is that, without getting overly pessimistic, we have a federal election 11 months away, and there's going to be some of these key economic issues that are going to be very important, not just for Alberta, but for the country, as it relates for not distributing the economic pie, but actually how do we grow the pie that we can then distribute more effectively. So I think a lot of the issues related to tax competitiveness, reducing excessive regulation, and I think a coherent energy policy that might, risk some of the environmental friendly, measures that have been taken, the discussions that have to take place, regionally with the First Nations, so on and so forth. The important thing in Canada is that before we can distribute the pie to everybody, we have to grow it. And energy is a vital part of this economy. I think that's really been lost. We have to find the right balance, of course, between environmental concerns and between our energy security and the economic growth and vibrancy that comes with it. I think that's really been lost. But I'll tell you right now, if you're asking my forecast, out of the three things I've talked about, excessive regulation and taxation, I would actually say that energy policy will emerge as really the top campaign in the next 11 months before the election. And I think that's a good thing. It'll help frame what has to happen in this country. What has to happen in this country is we have to be able to sell our oil to our foreign customers instead of giving it away for free.
Do you see any merit, or can you make any argument for being a contrarian in this space and contrarian today, actually being bullish on Canadian equities with sentiment so low, prices in energy so low? Is there merit in potentially going contrarian and saying, I actually don't think it's that bad? I think that energy companies are not in the same position that they were in the crash of 2016. I think banks are better cashed up against a crude crash. And what would you say to somebody who thought about going contrarian and being an optimist on TSX right now?
Well, it's funny that you asked that, because it's in my morning note today. The economist will talk about whether things are good, bad, or indifferent, and then it's up to the strategist to decide, well, how much of that is priced into financial assets. So look, the news in Canada is bad. The polite word on Bay Street is it's challenging. Things here are certainly not good. If they were, I'd say for the Bank of Canada, go ahead and raise rates. Things here are not good. But when you have the TSX trading at a 13 forward PE multiple, I mean, Canada is starting to trade like an emerging market. And as bad as things are, sorry, we're not Indonesia and we're not Malaysia, we're not the Philippines. But only 5% of the time historically has the Canadian stock market traded as cheaply as it is today. So you have more than just a lot of bad news priced in. You have, almost a recessionary situation priced in. So the U.S. is trading closer to a 16 multiple. We're trading closer to a 13 multiple. That's almost a 3 PE multiple discount that Canada trades at. In our market historically, if you believe in mean reversion, it trades right in line with the U.S. market multiple. We're 3 multiple points below the U.S. Last time that happened was in the summer of 2004, when quite remarkably and surprisingly, the Canadian market in the next year outperformed the S&P 500 by 1,000 basis points. So frankly, I'm not overly bullish on the Canadian outlook, but I am getting more bullish on the Canadian financial asset aspect of it, because so much of the bad news is priced in. It's even surpassed on the downside, what my expectations are. So it's looking, from a valuation standpoint, looking pretty interesting to me right now.